Hyundai's $21 billion investment in the U.S., a game changer or a defensive move? Breaking news. Hyundai has just announced a massive $21 billion investment in the United States. Is this a bold expansion strategy, or is Hyundai trying to protect itself from US trade policies? With rising global tariffs, increasing electric vehicle competition, and political tensions affecting international car manufacturers, this decision could reshape the global auto industry. So, is this a smart business move, or is Hyundai taking a massive risk? Let's break it all down. Why is Hyundai investing in the U.S.? Over the past few years, global trade policies have become unpredictable. The U.S. has imposed tariffs on foreign car manufacturers, making it more expensive for companies like Hyundai to import vehicles into America. At the same time, the Biden administration has rolled out massive incentives for domestic electric vehicle production, offering tax breaks and government support for automakers that build their EVs in the United States. Hyundai's $21 billion investment is a strategic move to ensure that its cars qualify for US tax credits while avoiding heavy tariffs. This means cheaper production costs, better profit margins, and a competitive edge in the American market. But is this enough to guarantee Hyundai's dominance in the U.S., or does it still face major risks? What does Hyundai's investment include? Hyundai's $21 billion plan focuses on three key areas. Expanding US manufacturing plants. Hyundai plans to increase its production capacity in America to build more electric and hybrid vehicles locally. Battery and EV technology development. A significant portion of this investment will go toward research and production of next-generation EV batteries, ensuring Hyundai stays competitive in the growing electric vehicle market. Job creation and infrastructure growth. Hyundai has committed to creating thousands of new jobs, strengthening its relationships with American workers and policymakers. This investment puts Hyundai right in the middle of the US EV race. But can it compete with Tesla, Ford, and General Motors? What are experts saying? Hyundai executives say, This investment ensures our long-term success in the US market. We're building a strong foundation for EV production and securing our future. Industry analysts believe Hyundai is making a smart move. By investing now, it benefits from government support and avoids future trade restrictions. Critics, however, warn $21 billion is a huge risk. What if EV demand slows down in the coming years? Tesla, Ford, and GM already dominate the U.S. market. Can Hyundai really compete? Clearly, there are mixed opinions on whether this is a brilliant business strategy or a risky gamble. How does this affect the EV market? Hyundai's investment changes the landscape of the EV industry in the U.S. now. Tesla remains the dominant player, but Hyundai's expansion could challenge its market share. Ford and General Motors are also investing heavily in EV production. So Hyundai must differentiate itself with better technology, lower prices, or improved customer loyalty. China's BYD is expanding rapidly, meaning the global EV competition is tougher than ever. So, what happens next? What this means for consumers and investors? If you're a car buyer, this could mean lower EV prices in the coming years as more competition drives down costs. If you're an investor, Hyundai's expansion in the U.S. could push its stock higher, but the company still faces risks. If you work in auto manufacturing, this means more job opportunities, but automation could also change the workforce. What happens next? Hyundai's investment is just the beginning. Other global automakers may follow with similar US expansion. The U.S. government may introduce even more policies favoring local EV production. The global auto market is entering a new phase of competition. Only the strongest companies will thrive. So the big question is, final thoughts. Is this a win for Hyundai? Is Hyundai making a smart long-term investment, or is it taking a huge financial risk? Will this help Hyundai compete with Tesla, or is the U.S. market already too crowded? We want to hear from you. Do you think Hyundai's $21 billion investment will pay off? Drop your thoughts in the comments. Will Hyundai become a dominant EV brand in the US? Or is this too risky? Like, subscribe, and turn on notifications so you don't miss the next big market update. Stay informed, stay ahead, and stay prepared for what's next.